Hello, folks. Good evening. My time. Welcome to my YouTube channel. Once again, I am Optimist. And for those watching this for the first time, please kindly like and subscribe. I really appreciate, folks. Institutional order flow 2. Yeah, I'll be quick with this. So if you're watching this for the first time, please kindly go back to the first video I made on institutional order flow 1. That's institutional order flow 1. Then kindly go back to it and watch that one first. That's if you're watching this for the first time. So this is just the part 2 of institutional order flow 1. So in our previous discussion, I talked about who the central banks are, what institutional order flow really means, and I gave a comprehensive definition about institutional order flow. So this is just the part 2 of that, and I think it should be the last. It will have to be the last because I'm sorry, folks. I really want to give out more information, but I realize a lot of information are free on YouTube. It's not really that, but I don't understand. Like my my students are really complaining that I'm giving out much, but I really want you guys. If you really want to understand institutional order flow, then follow Michael J. Augustine YouTube mentorship. He really talks a lot about order flow also. So this should be the last video I'll be talking about institutional order flow, and I'm here to promise you it is comprehensive enough to understand. If you can watch the 1 and 2, and you can go to your charts and start looking at your charts from the liquidity points that the market is also always seeking liquidity, and you're just trying to look for evidence, maybe it's true or not, then you really understand that all I've been saying is just true. So the market is booked on liquidity and imbalance to rebalance. Michael J. Augustine said that. That's the creator of institutional methods. So in this video, we'll be having an in-depth study into what external liquidity means and what internal liquidity means, and components to frame on. Yeah, when I say components to frame on, I'm talking about evidence that price is going for a particular liquidity. Yeah, something like that. So yeah, I remember the last video, institutional order flow 1, I said the creator of price, the controller of price, which is the central banks, which control price autonomously and manually, can accumulate liquidity, can induce trader and accumulate liquidity at a particular side of the market, maybe the buy side liquidity. Look at this example. The buy side liquidity was accumulated here and immediately it was grabbed, it was offered to the sell side, and it produced volatility. I said that the market, the controller of price, they can accumulate liquidity at one side of the market and grab the liquidity just to distribute it and or deliver it to the other side of the market. I said that, and in turn it produced volatility, as we've seen here, volatility into the market. The side liquidity was grabbed here. You can check back. This is euro pounds 5 minute chart on Thursday, that's 24th of February 2022. The sell side liquidity was grabbed and the liquidity was offered to the buy side, and same thing here, the buy side liquidity was grabbed and offered to the sell side. So this is what I mean by liquidity to liquidity. That is what institutional order flow entails. So let's talk about external liquidity. What are external liquidity? Yeah, we have the buy side liquidity and the sell side liquidity. Yeah, for the buy side liquidity, this is an accumulation of buy stops, which is the stop losses, above an old high, equal highs, double tops, on the basis that retail sees these points as a kind of resistance and are forced to place their processive stops above this structure. retail see this as a kind of I'm sorry for that. I'm sorry for that. So retail see this as a kind of resistance, and they want to sell from that resistance. That's what they do. And when they sell from this resistance, where would their stop be? It will be above this high. They will put it above this high just to protect their entry. Yeah, sorry for that. I said retail see this as a kind of resistance, and they put their protective stops above this resistance, and this stacked up of orders create this buy side liquidity. Buy stops are above it, stop losses, so it creates a kind of accumulation. And the algo that deliver price for central banks see that as a target, and as an institutional trader that we are, like traders that make use of institutional methods, we want to target that eye also as well. And that's just what order flow entails. So this is an example of a buy side liquidity. And for the sell side liquidity, accumulation of sell stops, stop losses below, I'm sorry for this, below an old low, equal lows, double bottoms, on the basis that retail sees this point as a kind of support and are forced to place their protective stops there. So this is an example of the sell side liquidity. Yeah, you can see it was intentionally engineered by who? By the central banks. They are the only one that control price. So it was intentionally engineered so that retail traders, retail logic, will see this as a kind of support, and they will be looking to get an entry from here to buy, and of course they will make profits. They will make profits. So this is the 4 hour time frame example. Same pair, euro pounds. So I want you guys to check what really happened to this sell side liquidity. You will see that the sell side liquidity was grabbed. It was taking an offer to the buy side liquidity. It was taking an offer to the buy side rather. I'm sorry for that. The sell side liquidity was grabbed an offer to the buy side. That is what institutional order flow entails. And immediately it was offered to the buy side, we observed volatility in the market. You can check it. This is the 4 hour time frame. Yeah, to the internal liquidity is just about understanding fair value gaps. So we have two types also: buy side imbalance, sell side inefficiency, that's the BC, and we have the sell side imbalance, buy side inefficiency. This is just a name. It is just a name. Don't confuse yourself. They are both collectively known as fair value gaps, or you can just call them liquidity voids. Yeah, they are liquidity voids. It is formed on the basis of inefficient price delivery by the algorithm. The algorithm that delivers price was created to deliver price efficiently. So, if it delivers inefficient price, we form this kind of logic that price is just meant, the algo will still redistribute price to that point just to efficiently deliver it. I don't know, maybe you grab what I'm trying to say. This is an example. From this candle's low to this candle's high, we had an inefficient price delivery here. Inefficient price delivery. Price was only delivered to the sell side. You can see it was just selling, no buyers inside. So the algorithm came back to fill it up before moving down. That is fair value gaps. So we kind of form this kind of logic that price is always meant to go back to either fill fair value gaps, or take highs and lows, or take out equal highs and lows. So that is everything about institutional order flow from liquidity to liquidity. That's what I was trying to make you understand, that price is always going from one point to another, and from this point we are always watching out for liquidity to liquidity. It can be internal liquidity, it can be external liquidity. Internal liquidity in forms of fair value gaps. So this is a brilliant example of the fair value gap here, you can see immediately the buy side liquidity was grabbed and we broke market structure. We had a fair value gap, and this was an entry. This was a kind of signal for us that the algorithm is now ready to deliver the buy side liquidity to the sell side, just to what, maybe to fill this fair value gap. And of course it filled this fair value gap. Yes, you can see this fair value gap, it filled it, and there was a fair value gap here also, but this was an order block. Actually, this was an order block. It filled it, came to the other block before continuing higher prices. So that is everything about institutional order flow. So now what next? As a trader that sees the market from the liquidity standpoint, the components of liquidity are what forms the logic behind framing a setup with evidence that price is seeking for liquidity. What I'm trying to say is just that when we analyze our charts, we are trying to look for liquidity points. Where is price likely to go? Where is the nearest fair value gap price is likely to fill next? So we kind of form logic of our setups on that with evidence that price is going there. We need to see evidence. The evidence we want to see maybe is just a break of market structure to that point, to that direction. Yes, just like this, with evidence that price is coming for the buy side. Look, this is an example for liquidity rather. This is an example. We have the buy side liquidity. This was a trade I actually engaged, and this was how I formulated the setup. The sell side liquidity was grabbed. I did not bother about that. But immediately I saw break of market structure to the upside, I saw this mini low being cleared. This was an order block. Price has given me enough evidence that price is coming for this buy side liquidity. I have the evidence. I have a logic. The logic is that price is likely to come. Remember I said likely. Price is likely to come for the buy side liquidity. That was the logic behind the setup, and I want to see evidence. I don't just see buy side liquidity and I want to engage buy. No, I want to see evidence. The price is going there. That is when I now combine every weapon in my arsenal together just to form trade setup on that. That's when I consider using my Fibonacci to check for optimal trade entry. That's when I start looking for order blocks. That's when I start looking for mitigation blocks. That is when I start looking for breakers and the rest. If you look at this well, this is a breaker. Yeah, this whole candle is a breaker. You could have been a buyer from this breaker. You see, the number one thing I did was to look for where is liquidity, where is price likely to go next. Then immediately I was able to understand, or immediately I was able to grasp where price is likely to go next. The next thing is to form setup based on that logic that price is meant to go to that particular point. And immediately I form the logic. I need to see evidence that price is going there, and the evidence you can see is break of market structure. That's when you want to start looking for BMS, other blocks. That is when you want to start looking for your supply and demand zone, folks. This is when you need to start looking for it with the evidence that price is going for that liquidity. And that was what I saw here, and I took the trade from here just to grab buy side liquidity. And immediately the buy side liquidity was grabbed. You have to check back. Immediately buy side liquidity was grabbed, we observed a break of market structure. There was a fair value gap. This gave us evidence that price is about to be delivered to the sell side. The liquidity grabbed here was about to be delivered to the sell side. We need the evidence. The evidence is important. First, we need the target. Where is liquidity? Where are we trying to reach for? We need to form a logic to the setup. And then once we form a logic that price is meant to go here next, we need evidence that price is going there. And that is everything about institutional order flow. We are not going to our chart to look for order block first, liquidity first, setup, then evidence. That is everything about institutional order flow. So this is an example. This is a brilliant example. This low was grabbed here, price broke structure. Immediately price broke this structure, we had the evidence that price is seeking liquidity above, because the liquidity below has been grabbed, the sell side liquidity has been grabbed, and the liquidity is being offered to the buy side now. The liquidity is being offered to the buy side. So immediately price broke this structure, we now have the evidence that yes, price is going for higher prices to grab liquidity above high, to fill gaps. And if you can check back, this is called JPY daily time frame. If you go back in time, you will see highs here that were grabbed by this, and this was how I formulated the trade. And from here I knew order flow was now bullish. Yes, immediately this low was taken, you see there was a fair value gap here. I did not bother about that because there was no evidence that price is coming for that fair value gap yet. Immediately this low was taken out, this is my break of market structure. Yeah, some people will say it is a stopwatch, you are right, but I see this as a break of market structure to me, because if you check the 4-hour time frame, you will see a candle close. So this is a break of market structure. This gave me the evidence the price is now coming for this fair value gap, to fill this fair value gap. And that was the trade logic. This was the logic that order flow is now bearish on JPY. So from here, immediately we trace to the upside. There was an order block here. I was now looking for sell setups just to get me in sync with order flow, so I can get everything. I'm not a swing trader, I day trade, but at least you can understand that price is just meant to go lower, lower and lower and lower, and you can just be confident that price is just going lower. And then from here, I don't know what happened, price just started going up. Of course, order flow is still to the downside to fill this gap. Yeah, to fill this gap. And there was a trend line phantom. Immediately I observed this trend line phantom from here, I realized price is just coming back for this low, and this is still the ultimate target. It might not get there, but that's fine, but at least price is making efforts to reach there, and you could just be making money just trying to look for sell setups. You've seen the evidence that price is coming for this fair value gap, and I'm still very much on. This is not a signal, folks, this is not a signal at all, don't take it as a signal. So I still believe institutional order flow on JPY is to fill this BC fair value gap. So the first thing is you need to see where is liquidity at the moment. I see this as a liquidity point, and I've seen evidence break of market structure, multiple break of market structure, and I've seen the price is just trying to reach for it. Price has already grabbed this low. Where next? Fair value gaps. This is called JPY. This is called JPY. December we had a fair value gap. The fair value gap was created. Yeah, the fair value gap was created. Immediately price broke this. I realized price was going for higher prices. Yeah, about this, interest rate changed on this day, on 24th, was it 24th or 20th? Yeah, 21st of December, when the interest rates for pounds changed. That was what changed order flow to the upside. Otherwise it was still meant to go down and go down. So immediately the interest rates changed, order flow became bullish, and immediately we broke market structure. These are things I have in my arsenal that lets me know order flow more. I make use of commitment of traders, not often, but when price gets confusing and I don't know where it's going to, I make use of COT, seasonal tendencies, but you really don't need it. Yeah, guys, you really don't need it. So immediately the interest rate changed. yeah, I realized price was just immediately price gave this kind of fair value gap and broke this high. I realized price was just going for higher prices, and from here institutional order flow is now bullish to reach to where, I'm sorry folks, for where, to reach to what point there was a fair value gap above. Just check your GBP USD, you will see it. And then from here we have a stopwatch here, break of market structure somewhere here, and this was what gave us this kind of insight that price is meant to grab this low. Yeah, I knew price was coming for this low, but I did not know it was coming very fast. But because of the fundamentals behind this Russia and Ukraine, it gave us a very sharp decline into where, into the fair value gap. And where is the next liquidity? Look at it. Where is the next liquidity? This looked to me like an equal high, but before that, what is this? Equal lows. So this is just liquidity, guys, from liquidity to liquidity. So this looks to me as an equal low. I see this as an external liquidity, and I see this as an external liquidity also. Where is the next fair value gap? Tomorrow candle should create a fair value gap. After tomorrow's candle close, there should be a fair value gap here. Whatever, we are not trying to predict, we are just trying to see evidence which liquidity point is market going for next. We need the evidence so as to be able to confirm that our setup, the logic behind our setup, is right. I hope you find this video insightful. If you gain something from this, I would really like if you can comment. I would really love that, guys. I would really appreciate if you can comment, give me a thumb up. It will give me, I don't know, my head will swell. It will give me this kind of feeling that I'm doing something great. And yeah, of course, don't expect institutional order flow theory, folks. This is where I will draw the curtain on about institutional order flow. Everything you see on my YouTube channel will just be trade setup and all. So a lot of you guys that don't have a mentor and you can't afford a mentor, Michael J. Augustine is having this YouTube mentorship. You should definitely go and watch the videos. It is free. Yeah, it is free. If you can't afford a mentor, it is free of charge. You can check these videos and just get in sync with order flow. But I've explained everything you need to understand about order flow. It is just about understanding liquidity. Where is market trying to reach for next? Is there evidence that market is trying to reach for that? You need to see a break of market structure. You need to see evidence that price is trying to reach for it. And when you see evidence, you need to just formulate a trade setup and get in. Alright guys, till next time, I wish you good luck, folks.